No, look at Jamie Dimon. Jamie Dimon, what is he doing? He's loading up on...
Housing has been decimated over the past 3 years. Higher interest rates.
So in this video, we're going to talk about ICP's price action. Lots of people want to talk about the technology, which is great. The fundamentals are phenomenal, but in this video, we talk about price action, right? We're investors. We want to make massive life-changing returns. That's the only reason we're in this space. I totally understand the frustration. I own a massive bag of ICP tokens. Eventually, I'll make my Neuron public so you can see how much I own, because I do want to do some creative things with this project in terms of scooping up the supply. There's lots of different ways we can take advantage of this. And so I'm working on something. We'll see how that goes. But in the meantime, again, we're talking about price action, how frustrating it's been. Again, I have a massive bag. It's locked for 8 years. So I'm enjoying the passive income in the meantime. So I'm not as worried about the daily fluctuations, but I know a lot of people are so frustrated by this asset. So we're going to explain exactly why it's doing what it's doing and what could possibly come next. So if you've been following any of these videos on this channel, you've probably seen this before, but it's just so crucially important to get across because a lot of people don't fully understand the correlations between ICP's price action and everything else, because it's all explainable by the exact same thing. Crypto total market cap excluding top 10 dominance percentage. What we see is a horrendously ugly, terrible looking chart. We had the peak bull market of 2021 back here, and since then we've done nothing but bleed down. We had this pump in 2024, and then we had this miserable correction down. That looks exactly like the trend of ICP's price. We had this pump in 2024, just like the other one, and now we've had this crash down, and we've just been banging along the bottom. So early stage investors understand the potential of altcoins outside of the top 10. There's serious adoption of these assets. So ICP is correlated to that broader market. So currently, since ICP is trading with that broader market, if you're bullish that broader market, you're bullish ICP because they're all going to move together as the market starts to understand which are high quality, which ones aren't. But right now, if you're trying to explain the price action of ICP, which is this over the last year, you have to explain the price action of the crypto total market cap excluding the top 10 dominance, which is this. We cannot explain one without the other. Here's just one example of another asset trading like this. This is pancakeswap. It pumped in the bull market of 2021. Look at its price action. It's done horrendously. Its trend is identical to the rest of the altcoin market outside of the top 10. The charts are all horrendous. Some are varying degrees of horrendous, but at the end of the day, they're all horrendously ugly. There's just massive sell pressure because no one understands these assets. But pancakeswap, for example, is earning a massive amount of revenue. Look at the fees over the last 30 days. We have Tether, which is $100 billion plus asset, earned $462 million over the last month. Massive. We have Tron, tens of billions of dollars of stable coins are on Tron. It's earning fees from that, $393 million. We have Circle. They just went public at a multi-billion dollar valuation. They earned $207 million. Look what's next. pancakeswap, $121 million. That's beating Hyperliquid. It's beating Aave. It's beating Uniswap. Tell me the fundamentals of pancakeswap aren't positive. They absolutely are. Look at the price action. It's part of the altcoin market that has been bleeding over the last year. Why is pancakeswap generating so much money? Because a lot of the volume from Binance moves on to pancakeswap. Which chain has the highest decentralized exchange volume? Binance by far recently. A lot of that's moving straight to pancakeswap. So fundamentals don't matter at this point. We're just one big blob of altcoins perfectly correlated, essentially. So if you want to understand ICP's price action, again, we have to understand the price action of the broader market. What's moving the price action of the broader altcoin market? Well, again, this is something we've talked about before, but again, super important to hammer home. This is the United States ISM Purchasing Managers Index. What we see is that it looks exactly like an altcoin. This essentially measures economic activity, smaller cap companies, the economy outside of the top 7 big tech companies, essentially. Smaller market cap assets, risky, speculative assets that need investment capital, that need liquidity. Well, guess what? It looks exactly like the chart of the crypto total market cap excluding top 10. We had a pump in 2021. And since then, we've just bled down. If the United States economy looks like this, then we can't expect there to be a renaissance in early stage undiscovered assets. It does not happen. We see a flight to safety. That's what we're seeing in the top 10. That's what we're seeing in the assets that institutions are actually aware of currently. They get aware of the other assets when they pump. Capital gets inexpensive, rates come down, liquidity rushes into some of these assets, they start to get aware quickly. Just like they were late to the game with Bitcoin, Ethereum, Solana, they're most likely going to be late to the game of these other undiscovered altcoins. You can't understand ICP's price action without understanding the altcoin market, and now without understanding the ISM. Again, that's essentially the backbone of the economy, and this hammers it home. And you've probably seen this before, but again, really important. ISM in black, altcoins as a percent of Bitcoin total market cap in pink. Again, the correlation, rock solid. So there's no complaining about the price action of ICP without complaining about the price action of the United States economy small cap stocks. They are identical. They're all driven by the exact same thing. So I get it's frustrating to be an ICP holder. It's also frustrating to be an altcoin holder. It's also frustrating to be a member of the US economy that's outside of the top 7 assets on the planet, the top 7 big tech assets. It's all frustrating. We're all in the exact same boat. And what is driving all of it? Interest rates, as I've talked about before, the oxygen of the financial system. Here's the chart of the 10-year bond yield. If you flip this upside down, it looks like altcoins, it looks like ICP, it looks like the ISM. This is inversely correlated. So since the last bull run, we've seen a massive spike in interest rates. Interest rates are the cost of capital. When it gets expensive, no one can go out and raise money. No one wants to invest in speculative assets. It costs a lot of money all of a sudden. So you're not going to get liquidity into these cash-starved industries or early-stage speculative assets. You're just not going to see it. Bitcoin benefited from 0 interest rates from 2009 to 2021. That's how it was able to go and get that scale. It was very lucky, essentially, because for the entire lifespan of Bitcoin, it had 0 interest rates. Sure, now it's gotten so big that now it has institutional adoption and you're seeing it as a flight to safety, but Bitcoin launched at the ideal time. ICP, other altcoins launched at a horrendous time. But again, I'm just trying to explain why ICP is doing what it's doing. It goes back to interest rates. Interest rates are stifling everything. But guess what just happened? The August jobs report sorely misses forecast, bolstering interest rate cut hopes. So when the economy slows down, inflation slows down, interest rates can come down. Because if the economy just grinds to a halt, there's no growth. And when there's no growth, there's no price inflation. No one can afford anything, essentially. So the price of everything falls. That's called deflation. When you have deflation, you crush inflation down to nothing. And the whole reason why interest rates are high is because inflation has been sticky high. That's why they have to keep interest rates high, because inflation has been sticky high. So when we get a bad jobs report, it means the economy's slowing. It means deflation. It means potentially the Federal Reserve can finally lower interest rates. And so what does that look like in the 10-year bond yield? Well, if we zoom into recent activity, we see a drop in the 10-year bond yield. Based on what I'm saying, it should be incredibly bullish to get a trend move like that. Incredibly bullish. Mortgage rates tumble to lowest level since October 2024. Because of all this we're talking about, mortgage rates fall, life can enter the real estate market again. This is essentially planned and manipulated economy. None of this is natural, but that's the world we're living in, right? When the economy does poorly, the cost of capital comes down, money can finally move into assets, and it kind of rescues different markets. So October 2024, that's where mortgage interest rates tumbled. We haven't seen levels like this since October 2024. What happened in October 2024 to assets like ICP? Well, this is October 2024. And this is what happened after that. Interest rates fell in October 2024, and ICP skyrocketed. There was serious bullishness about it. What happened to the rest of the altcoin market? We had a drop in interest rates in October 2024 because of some scare, and look what happened. The rest of the altcoin market skyrocketed. So we're all correlated. We're getting a similar move to what we saw in October 2024. That led to a massive bull run in early stage undiscovered assets heading into year end. We can expect a similar pattern to the end of last year. A massive pump in these assets heading into year end. December was unbelievable. I have a conspiracy theory that assets pumped in December so that a bunch of people could book capital gains tax and pay a massive amount of tax for 2024. Because that's what happened. We had a massive rally in these assets in December. People booked a lot of gains, owed a lot of tax, and had to pay all that then assets fell. That's just probably not likely, but that's how it worked out. So obviously everyone, the government would love a pump in these assets heading into December. It'd be very good for the 2025 tax year. So based on this, we're seeing a softening market. We're seeing lowering interest rates. That should lead, just like in 2024, to a massive bull market in these assets. Again, it takes time. It doesn't happen right away. Just like October 2024 was here and it led to a massive bull run in ICP, there was a lag. So it's on its way. If we see this trend continue, then we can get very, very, very bullish on these assets. So a potential bull run into year end looks likely, but on this channel, we like to stay on top of what some of the biggest thought leaders on the planet are doing. Let's see what Jamie Dimon, the multi-billionaire CEO of the world's largest bank, thinks is coming. Then we'll see what Cathie Wood thinks is coming. Again, let's just get all these different perspectives, and then we can come up with the most likely scenario in the short term, in the intermediate term, and in the longer term. Here's Chris Whalen. He's a banking analyst, and he really understands the banking sector. He's going to tell us what Jamie Dimon is up to.
I have been buying more defensive names. I've been accumulating Annaly, which owns a lot of mortgage backs. But for me, I'm looking for the next buying opportunity. May come from President Trump, may just come from the banking sector. But I do think we're going to see more volatility as we go into the end of the year. No, look at Jamie Dimon. Jamie Dimon, what is he doing? He's loading up on T-bills. He's going long duration after a long period of being more or less neutral. So he's expecting rate cuts one way or another, whether it's voluntary on the part of the Fed or whether they have to cut because something happens.
So he's saying Jamie Dimon is expecting interest rate cuts. So he's literally buying bonds. He's buying that 10-year yield. When you're buying these, you want the yield to come down because that means the price is going up. So Jamie Dimon is bullish on this coming down further. That is very good for assets correlated that go up when the interest rates come down. And Chris Whalen said he's buying NLY Capital. Well, look at the chart of NLY. It's a mortgage REIT. It looks exactly like ICP. So Jamie Dimon is expecting the Fed to be forced to lower interest rates. The most powerful, richest people on the planet positioning that way. Again, if you're bullish NLY goes up when interest rates go down. ICP goes up when interest rates come down. Their charts look identical. We had a pump in 2021, and we've had a bear market since, and a crab market now. Now, he said Jamie Dimon believes the Fed will be forced to lower interest rates. That's where things get very, very, very interesting. Because if the Fed is forced to lower interest rates, they're forced because there's some big problem in the economy. Maybe commercial real estate has a crisis. Maybe some banks start failing. Maybe the economy continues to get softer and softer and gets super weak, like we saw with that August jobs report. That would scare the market at first, like we've seen recently. The soft jobs report kind of lowered the NASDAQ. It lowered some big cap tech assets because the market's all of a sudden worried about the economy. But we know that that means stimulus. Interest rates, just like during the pandemic. Remember how it was the worst economy the United States had seen in like 100 years, but the stock market skyrocketed and Bitcoin went from 3K to 69K and ICP had a multi-$100 billion market cap, even though the economy was terrible? That's what happens. The economy goes south, the Fed is forced to lower interest rates, and assets skyrocket. That's what Jamie Dimon is betting on. What about Cathie Wood? What does Cathie Wood see going forward?
We've been talking about this rolling recession for the past 3 years. Manufacturing's been negative for the past 3 years. Housing has been decimated over the past 3 years. Low and middle income consumer has been hurt badly during the past 3 years. Higher interest rates, higher food prices, housing affordability. So very difficult times. Now, what I find interesting about this chart is, sure, again, we're in this rolling recession. We think it's the final leg of the rolling recession. And what I'm eager to understand, as the Fed cuts rates, this will continue to steepen. But if you look at the trend since 08-09, the trend has been down towards a flatter and flatter yield curve. We didn't get back into the 200 to 300 basis point range as the Fed was flooding the economy with money. We didn't. What was this pointing to? And we think there's an underlying deflationary narrative building into the yield curve, and we should know by the end of the year. If we don't, what that would tell us is that this deflationary narrative that we have, it will raise the probability that that is correct. And that is the long bond picking up on that and not increasing as much out of fear of inflation as the Fed eases.
So essentially when that chart goes up, it's bearish crypto. When that chart goes down, it's bullish crypto. She thinks that this is in a long-term downtrend. So she invests in these super early stage speculative assets that generally require environments where investment capital is plentiful. She thinks that trends down. Again, when that goes down, ICP will skyrocket like it always does when rates come down. So she's structurally bullish long term. So Jamie Dimon is positioning for rates to come down. Cathie Wood positioning for rates to come down. She's been that way for years. Like she said, over the last 3 years, it's been very difficult for a lot of different people, including obviously ICP investors. So we're explaining why ICP price action has fallen, and we're explaining why, according to Jamie Dimon, according to Cathie Wood, it's going to go up for the same reason interest rates are about to come down. So what do I think? I think that as long as this trend is down, we can get incredibly bullish. Now, obviously, the reason it's coming down is because the economy is slowing. When the economy slows, usually stuff starts to break, right? Banks fail. There could be some crisis. So I agree with Jamie Dimon. I've been saying there's going to be a bull run, but between July and when Jerome Powell leaves, it's all going to be correlated to interest rates. Well, we've already seen interest rates start to fall. So as these fall, I get more and more and more and more bullish, even though there could be some volatility as they're on their way down, right? We could have a crisis here, a crisis there. People could wonder what the Fed's going to do. Will Jerome Powell lower interest rates? At the end of the day, it looks like they're going to force yields down. And so I can cover this in a separate video, but what the world seems to think is that inflation is going to stay high, so they really can't do anything with interest rates. So as long as inflation stays sticky because of tariffs or whatever, the Fed's not going to be able to lower interest rates. The fact is, I agree with Jamie Dimon, the Fed might be forced to lower interest rates. There could be a lot of volatility in between now and then, but the fact is they're going to force rates down. And the way they do that is by buying up their own bonds. They buy their bonds. It's called yield curve control. They control the yield by printing money, buying bonds. There is nothing more bullish for the upward price action of assets than yield curve control. So we're heading in the right direction in terms of assets skyrocketing. It's just a matter of how much volatility. I don't know. I don't know if there's going to be volatility or not, but I do know the government is going to do everything they possibly can to force yields down. So I do agree with Jamie Dimon. Market seems to agree. If this hits a brick wall and they just skyrocket back up, that's incredibly bearish. I don't know. What I do know is the trend seems to be in the right direction. They can ultimately do yield curve control, but if they do yield curve control, it means there's going to be some scary crises that force them to do yield curve control. So probably some volatility, but the trend is in the right direction for now. And if you want to learn how to stake your ICP while we're waiting, which is what I've been doing for years, daily getting rewards, selling it, buying something else, getting paid to wait. If you want to learn how to make passive income on your ICP, you can reach out to me on Patreon. Thank you for following. Thank you for watching.